Hey investors, it's Stuart Cruz here, Cruz Asset Management. And of course, coronavirus is the only news in place right now because that's all anybody is talking about. But the real question I get from a market standpoint is, are the worst over? Is the worst over? And so let's take a look at some charts. Hopefully you can see my screen here. This is a chart of the S&P 500 over the last year or so, and we peaked February 19th. And then bottomed out, looks like around March 23rd. And so top to bottom, that was about, 35 days or so. And now it looks like we've been in a steady climb up. And what you see over here, these bright red bars are a Fibonacci retracement. And oftentimes we get tracement up to these lines, and sometimes like 50% or 2 bars, so 38.2%. What we've seen is we're kind of right there at that 50% retracement. And we did break through that, but fell off a little bit right now. So the question is, are we going to keep going higher or going lower? And I've got to say, I think that in a world where the post.com crash lasted 3 years and the financial crisis lasted 18 months, that 35-day top to bottom crash on a global pandemic where there's currently 13% unemployment, 16 million jobs have been lost already, and every single country and every single trading partner is down across the globe, that top to bottom, that this is all over in 35 days, I think is wishful thinking. So why the rally? Of course, well, the Fed has dropped trillions of dollars into the economy, both from stimulus packages and from backing the bond market up. So we've seen a nice rally. But let's take a look at history, shall we? If we go back to looking at some of these charts, this date is back post-financial crisis. And if we look through this financial crisis, we see that as we trend down, if we take a look right here, this is March of '08. And we rallied till May of 16. So that's 45 days where we rallied, 10% or so off of 1,200 up to 1,425. And then we had another sell-off. And then we rallied from July to August. That's another month or so, and had a huge decline. And then it looks like maybe we hit a bottom right there from November all the way up to January, so another 2 months or a month and a half, and then another leg down. So from the financial crisis, we've seen these multiple month-long rallies only to give way to another decline. Let's look at another market sell-off, which we saw post.com, which is 2000 and 2003. Again, we see the same thing. Here, we peaked at around 1520. We had a sell-off down here about 10%, and then from April all the way to August, so that's 4 months, we tried to fight our way back. Didn't work, and then we had a sell-off. And then here we have from April again back to May, so another month and a half, another leg down. And then we're looking at September all the way to March, so 6 months worth of more or less rally, and then a bigger leg down there, and continually rallies along the way. So the fact that we're showing a, March 3-week rally is certainly not indicative of the worst pain is over. What we see right now, 16 million jobs have been lost. Unemployment is over 13%, going higher than that. Manufacturing down 7.8%. The worst number in 74 years. Retail sales was down 8.7%. That is the worst number ever. Other numbers that we were seeing are just as bad along the way. I'm just looking at some of my notes. 7.5 million small businesses might close and never reopen again. That's the driving force of our economy. So I know we're talking about reopening our economy, but what would that look like? We don't have test and trace in place. We don't have a vaccination that's 12 to 18 months away. And so what I think we're going to get is more fear and a resurgence of the virus. I don't think there's any way around that. Now, that might not actually be the worst thing in the world, and I have been saying it's probably not the worst thing in the world, and maybe we shouldn't have been, I don't know, not to be cold, but so reactive to this. Certainly, we are okay as a society accepting a certain amount of deaths. I've heard it said that one American death is too many. But the reality is we have 2.7 million people die in this country every single year. 500,000 people die from smoking every year. 400,000 people a year die from heart disease. 100,000 people die every year from doctors misdiagnosing them. 50,000 people die every year from car accidents. We haven't outlawed cars or doctors or not exercising or smoking, nor do I think we should. But adding all those up, we seem to be completely okay with those risks. And right now, we have about just under 30,000 deaths from coronavirus, which is a fraction of what we've seen. So 28,000 deaths from coronavirus year to date. We probably have over 150,000 due to smoking, over 100,000 due to heart disease. Now, I get these numbers can expand exponentially, but if we were to model this out, what we'd basically say, if we have 330 million people in the United States, and roughly 80% of the people that are exposed to coronavirus self-heal, meaning they don't go in to get treated. So that means about 60 million, 66 million people might actually get treated if all 100% of the United States were exposed. And so if that were the case, and the death rate ends up being somewhere in the range of 0.5%, which is what we're seeing in Germany and in South Korea, what you're looking at is 300,000 deaths total. Now, if the healthcare system's overwhelmed and we see death rates in the 10% range, that changes numbers to, 3 million, 6 million deaths. We certainly don't want that. But the run-of-the-mill exposure to the coronavirus probably should be in the neighborhood of 300, 500, 600,000 deaths. Now, that's a lot of people, but it's not more people than die of things that we are used to in everyday society. So does it make sense to close down and to cause unemployment for 16 million people? That's roughly 500 jobs lost for every death that we are trying to prevent. And keep in mind, unemployment of over 10% studies will say, will cause certainty of loss of life, depression, lower life length, so people die sooner. And so several 100,000 people die every year more than they would have if the unemployment is high. So by definition right now, with unemployment at 13%, we are actually almost guaranteeing we're going to lose several 100,000 Americans because of the unemployment, where Corona has killed 28,000. And if allowed to run through society, might kill a few 100,000. The top estimate was 200,000. So literally, I hate to say and echo what Trump has said, but I've been saying this for months, the actual cure might be worse than the disease, in the sense that we are killing a different group of people, and maybe not in the same way where they're dying on ventilators, but they're dying from suicide, dying from basically giving up and from unemployment. We just don't see that in the headlines. So we need to be aware of these things. But be that as it may, we're still going to try and open up the economy. But there's going to be an excessive amount of fear out there, because what we're looking at right now is 99% of the population right now is unexposed to the coronavirus. So if you have roughly, I think the numbers were 600,000 confirmed cases of the coronavirus to date, 640,000. And if 80% of those people 80% of the people that are exposed actually don't report. So that means there's another 2 million people, 2.5 million people out there that have potentially been exposed to the coronavirus. That's less than 1% of the United States population. So if we opened up society and people are afraid to go out to their mailboxes, or people are afraid to have a jogger go by them, how do you expect them to go to restaurants or to stand in line or go to a sporting event or to travel and get on a plane? I just don't see it. And so by definition, even if you open up the economy, it's going to roll out extremely slow until there's a vaccination, which is 12 to 18 months away, or until there's testing and tracing. But we don't have that technology, and certainly not all the people are going to adapt the technology, because it's going to be not mandatory in this society, it's going to be voluntary. People are too afraid about Big Brother looking at their public activity to be to fully ubiquitously download these apps to actually allow for the tracing to be in place. And then Dr. Fauci said, I wouldn't count on every United States citizen to be tested. And any of the models that say, hey, we can go back to work, like the ones created at Harvard or MIT, that are suggesting we need to be tested every 2 weeks. So if we can't all be tested ever, and these models are saying we need to be tested every 2 weeks, there's a huge disconnect. So without these things in place, other models, again by Harvard, suggest that this is going to be around for 18 months. And so the real question is the economy going to be back in business after 35 days of a downturn when we've seen some of the worst economic shutdowns in our history? And I just don't think that's the case. So at Cruise Asset Management, we've been reducing risk. We will continue to reduce risk. Perhaps in a little bit we'll continue to nibble, but I know this social distancing and the lockdowns and the stay-at-home policies have caused the virus to flatten. But if one thing that this virus has proven is that over and over again, if you don't do anything, or if you allow the standards to be relaxed, it spreads. And now, instead of spreading from 15 cases once upon a time, just a month ago, it's going to literally be spreading from 28,000 cases. So the base will be bigger. It will exponentially grow faster. Even if they open up in little pockets, as long as there's one case or 10 out there, it will grow. So how will we react to that? Are we going to continue to have these rolling shutdowns for 18 months until there's a vaccination? And if that's the case, then I don't see how the economy can get anywhere near what it was on February 19th. It just seems impossible for that to happen. Not to even mention that at February 19th, the multiples were actually kind of getting a little expensive, and we were counting on quite a bit of growth in order to grow into those multiples. Now we're counting on, or we're suggesting there's going to be no growth, but negative growth, because we're in potentially one of the deepest recessions we've seen. The IMF says we're in a depression. Ray Dalio of Edgewater Capital says we're going to be in a depression. So the odds of us actually rebounding to kind of frothy levels of just a couple months ago seem really far-fetched to me. So I'm anticipating another down leg in line with what we've seen in history, where you've had legs up and then a more severe down, and then legs up and a more severe down. So we could be in this for quite some time, certainly longer than 35 days. So again, we're taking these measured protectionary steps at Cruise Asset Management. I would expect you to possibly sell on these rallies, and again, position your portfolio accordingly. So thank you for watching, and we'll continue to push out these videos, but stay safe, and let me know if there's any questions you have so that perhaps we can answer these things with data. I did want to mention one more thing. The markets have been acting a little bit more smoothly. Here we put on is a rolling correlation chart. And what this said was, this shows the correlations of stocks. And here we are pre-COVID-19. And then as the market started melting down, the correlations went pretty high. They spiked all the way up to like 70%, meaning all the asset classes were basically going down. And now what we're seeing is some of the correlations are starting to drift down, which is a good sign that the markets are returning to some sort of normalcy. Certainly doesn't mean that the panic is over, but at least the markets are operating efficiently. So we're going to continue to watch these things, but I think as we reopen the markets COVID's going to demonstrate that it's going to respike, keeping in mind that all the data is going to be 2 weeks delayed because we don't really have testing in place or tracing in place. So if we start seeing a spike, that's only because people have gotten the virus, spent 4 to 5 days in incubation, transmitted it, and then some people are starting to go in, and then we start getting results back. And by that point, we're going to be 2 weeks into it, and now you're going to have to react to a hotspot again. So this is what I think is going to continue to happen over time. So be wary. This is going to be, we're going to be in this for a lot longer than we think, as I've been saying for the last month, and we'll continue to act accordingly and keep your portfolio safe. Thanks. This is Stuart Cruz at Cruz Asset Management, and again, put some comments below about what you want to see, and I look forward to making the next video, and I hope you and your family are safe. Take care.